I think it's a great question because I think oftentimes people get confused. The way we think about it, alternative investments are unique and differentiated strategies which typically have the ability to be long and short. So think of things like long short or global macro, or even things like private equity under the broad umbrella of alternative investments. Yeah, so we would argue it's an environment that we think is conducive for alternative investments, and we have been receiving a lot of interest from our institutional clients asking about, what sort of strategies might be available and ultimately how do we use them. So to me, I think there's really three reasons why I think now is a good time. One is, as you point out, it's the 9th year of a bull market run. We certainly have seen increased bouts of volatility, and all anticipations are that we'll see more volatility, which means you need more non-correlating investments. Two, from a product perspective, a lot of these strategies were only available to big institutions and very large families in the past. A lot of the product innovation has now made it easier for the average individual investor, folks like you and I, can invest in these strategies. And then three, something that doesn't get a lot of attention, with the Jobs Act, it's now easier for these alternative strategies to actually market and help us and educate us about how we should be using these strategies in the portfolio. So we think the market environment is actually very conducive to it. Yeah, and I would say that we've been doing a fair amount of education on this. We think it needs to be sold as an education. What does it do? How does it work in a portfolio? It's a component. It's not the overall investment, but exactly to your point, that we think it's an added ingredient that will help buffer some of the volatility. A lot of these strategies typically provide different risk and return patterns over time. We think it's a nice complement to a ready, globally diversified portfolio. I think that oftentimes what I hear is people get hung up on the structure. So what I've described as a strategy, long short is a strategy. It's often packaged in an LP structure, and people say, well, that's a hedge fund. And people intuitively think hedge fund Madoff, so they think the structure is the problem. So part of our education is separating strategy versus structure. Strategy is, what am I solving for? How do the strategies work to derive outcomes over the long run? The structure is how they're packaged. Many of those have historically been structured in a hedge fund structure, but now more and more you're starting to find these strategies in liquid alternatives or a mutual fund type format, which I think is very good because it addresses some of those structural issues that oftentimes people fear when they think about investing in these types of investments.